Hi everyone, and welcome to our Business Grants and Funding Are You Eligible webinar. We will just get started very shortly because I know we want to keep this one pretty short and sweet. So thank you everyone for joining us for our final webinar of 2020. My name is Nicola Morgan and I will be your moderator. So today we are presenting Business Grants and Funding Are You Eligible, presented by Mariana von-Lucken, tax partner. So just a little housekeeping, as always, please put your questions in the Q&A box and they will be addressed at the end of the session. And I will hand over to Mariana now. Okay, Mariana.
Thank you, Nicola, and good morning, everyone. Today's probably more of an information session. Some of you may know some of these particular grants that I'm going to talk about, and some of you may not be aware. Happy to assist at any point, but the three grants that I'm really going to focus on, where I can see the value in, is the Manufacturing Modernisation Grant, the JobKeeper for January to March. That's still, you know, the last of the JobKeeper, if you like. If you're eligible, we need to reassess in early January. And JobMaker, some of you may have heard of that. I think they're just starting everything with job, because I think there's a job trainer as well, but I'm not covering it in this session. We'll go to the next slide, Nicola. So I just want to touch on the Manufacturing Modernisation Grant. AusIndustry have a great website. There's lots in it. I just thought I'd point out a few things that I thought popped out and would be relevant. You know, you can assess yourself while I'm talking to see whether you'd be eligible or not. There is, I think, with a lot of these things, a lot of criteria to meet, and it can make it difficult to meet that criteria. So, you know, how much you're getting for the grant? Well, the grant will be 25% of eligible project expenditure. So you get up to 100,000 minimum to $1 million. So that means if you spend up to, say, 400,000, 25% of that is 100, and that's what you would get as a minimum. You have to fund the rest. How you fund it, loan, whatever, is up to you. But the loan interest would not be part of this grant. You can't use the grant to offset that. You have to come from your own sources. Also, the project period's 2 years. That can be extended, by the way. So I thought of sort of 30th of June 2023. Because as you know, the grant is just opened. This is the second lot for the Manufacturing Modernisation Grant. It's got specific criteria. The application's open to the 21st of January. I thought that was very generous of them, considering you've got Christmas. That was sarcasm, for those that didn't pick that up. Because, you know, like most people are going to be away, but now, you know, if you want to go for this grant, you're going to have to put the application in and work over Christmas, really. And they're not extending it, and you can't go over that date. So there's no extension of time. The other thing to notice is that it's focused on specific areas. So if you are in that manufacturing area, it focuses in specific areas. So resources, technology and critical minerals processing, mining, food and beverage, medical products, recycling, clean energy, and defence and space. So it's quite specific. So it's obviously the government is trying to channel the funds into these areas where it wants to feed grants to and improve the economy in those areas. The grant opportunity is up to 50 million and the project's 2 years. 50 million will give you around, I don't know, maybe 240 applicants. That's what they were sort of saying. There's lots of information on the AusIndustry website. I'm happy to send you the links as well. There's a lot there. I'm just trying to bring out the sort of things that I think that will be useful for you. Now, one thing to be aware of, it's only when this grant is approved can you then offset the expenses. So if you incur expenses before you've been given approval, they won't offset against the grant they potentially give you in the future. So the grant is GST inclusive. You know that question about do you include it in turnover, does it include GST, all those questions. Well, it is GST inclusive and it is accessible. So it'll be included in your BAS. Next slide, please. So what's the eligibility criteria? So before you even go down the path of applying, you have to look at is your company eligible? So I've mentioned a few of those things, but have you got an ABN? Well, that's obvious. You can't be an exempt entity. So you have to be a for-profit entity. You have to be registered for GST. It's probably a given in most cases. Incorporated in Australia. Does not apply to trust, partnership and individuals. Can apply to a trust with a corporate trustee. So it's the corporate trustee that applies on behalf of the trust, and it's the trust's ABN, not the corporate trustee's ABN. But so a trust carrying on a business that has a corporate trustee can apply for this as well. It's got to be a trading entity, predominantly, trading. Manufacturing and medium, up to 199 employees. So if you've got more than 199 employees, you won't be eligible. You'll be knocked out. So this eligibility criteria is the first thing. Minimum spend of 400,000 because the minimum grant is 100. So 25%, as I mentioned before. The whole purpose is to achieve scale and create jobs. Projects, it needs to align to one of the manufacturing priorities, which we mentioned before, which was the medical, the mining, and the food and beverage. And you need to be able to support your 75% expenditure. There's a declaration you need to provide, and it's a standard declaration that the accountant signs. Next slide, please. So eligible activities. So what activities can you, so you now have determined you're eligible, what activities can you claim? So as you would assume, building, constructing, installing or commissioning manufacturing plant equipment, integrating production related software, not software development, but if it goes into the plant equipment, yes. Training and skilling up the development on the new technology. Process design and engineering directly related to capital investment. Fit out, alterations, extensions to buildings directly related to your capital investment. Again, it's got to meet those other criteria. Now, one thing is when you put your application in, it's electronic, is that I think you need to spend a bit of time because this is all merit-based. It's not like the R&D Tax Incentive where so long as you meet all the criteria, you'll be entitled. This is really weighs on certain criteria. So this is how they assess, and there's more information in the guidelines, but they want to improve Australian manufacturing competitiveness. So it's showing that it's competitive, and creating growth. So showing that growth, and I'll run through how you might show that. Capacity, capability, resource to deliver the project, that you can do all that. Basically, a plan. Impact of the grant fund on your project. What will it do for you? So these are kind of things that you have to answer within your application. So you have to really take some time out to do this. Next slide, please. So what can you claim? You can claim your plant and equipment. Now, when I say claim, to offset against the grant. Labour expenditure. Interesting enough, it doesn't include, like your leadership and admin staff, your CEO, CFO, etc. There might be a small percentage, but in general, not include those. Labour on costs and administration overhead. So you might have the 30% on top, so your on costs. And contract expenditure. Again, it has to all be documented. So it's a painful process. But once you've got it all in line, which you have all this information really when you're doing a big project, that you would be, that would cost about this much money, 400,000 minimum. So can't be eligible expenditure if incurred, as I've mentioned before, or paid before you have notified of the application is eligible. So by all means start, but you won't be able to get that expenditure. There's a whole list of what is eligible in the appendix to the guidance, and there's a whole list of what's not, we're not deductible, and that is financing costs, like the interest component of it, because you've got to fund the other 75%. Insurance costs related to product design and development specifically, they'll outline that there. So how to apply? So, complete an online application form, provide all the information they're required, like, check your check your eligibility, assess against the criteria, make sure you can support eligibility, support criteria, provide documentation, and include, they want these other things attached: detailed project plan, budgets, and explanation of cost assumptions. So, you know, why you think it's going to cost you that. Mind you, I think if you're going to go down this path, you would have done all this already, or you would be thinking about doing it. There's an accountant's declaration, and there's a template for that accountant's declaration. Support from the board, again, it's a declaration that the board is fully aware that they'll fund the 75%. And then trust deed, if you're doing it through a corporate trustee of a trust. So that's, you know, the bones of it. So check your eligible criteria, assess your criteria, and assess, you know, and then go to the assessment stage. So this is, you know, you put your application in and it gets assessed. You'll get allocated a person with his Oz industry. It'll go through the first round of, are you eligible? So do you meet those first criteria? If it says yes, then it goes to the next round of assessment criteria, and then the assessment stage where they'll come back to you in writing, either you met the criteria and you've been approved, or you're not. Now, even though you may meet, you're eligible and you meet all the assessment criteria, they have a point system and you may be out because it's competitive, right? It's a limited amount of money and they'll determine what is competitive. So I think the more information you give them to show the value of it, the more likely you'll get it. But, you know, no guarantees in life. So post-approval, so this is where the fun begins, you know. So once you've done all that work, post-approval, there's a grant agreement and there's a sample. You have to accept it within 30 days of being given to you. The sample's in the Oz Industry website. There'll be a reporting requirement like anything where you get a grant. You'll have to show basically where the money's gone and what you've spent, and there might be milestones you meet. So whatever's negotiated, and you'll see the contract, and that will be discussed with the officer. Also, at the end of the project, there'll be sort of like an independent audit, like a bit of an audit template that is available also to follow. And I understand that independent audit costs can be offset against the grant amount. Government to report successful applicants. So they may be published, you know, within 2 or 3 years. Nothing new there. So I'm going to move on to JobKeeper. Now, if you've got any questions, just write them in the chat box, and we'll have or question and answer, and then we'll get some time at the end. Now, JobKeeper, I think you're probably all fully aware of this. I just wanted to remind everyone that we still have the January to March stage. You may be on JobKeeper now from September, so October to December. You may have been getting payments. Your last payment would be in the 1st or 2nd week of January, you know, once you make your monthly declarations. Now, it may be that you weren't entitled to JobKeeper October to December, but you received it up to September. You can still apply and assess if you think that October, November, December 2020 to October, November, December 2019, there's been a drop of 15, 30 or 50%, depending which criteria. So none of the broad rules have changed. It's just looking at the time period has changed, and with the assessment period, obviously, and also the amount that you get. So that is going to drop in January, which you will get the first payment in February for your staff. Next slide, please. So as you can see, the JobKeeper has been dropping. And the last payment that you'll get in January will be that 1,200 for staff that are over 80 hours and 750. And then from 4th of January, you have to reassess, apply again online, and you'll get probably around February, when you do, you know, it's a month in arrears, $1,000 per employee and $650. Now, again, you need to make that assessment. And the same before, you know, have you over 80 hours or under 80 hours, as we discussed, and that's that last column there. Next slide, please. So really no changes to the rules. This is just a refresher to say, are you eligible employee? Again, it's not for new employees, only employees that existed 1 July sort of thing, that 1 July and before. You need to meet the wage condition, meaning you have to pay them as usual up front every fortnight. Okay, you might pay them in the month or you might pay them weekly, but as long as it's been paid by the time you're paying the JobKeeper, you've been paid the JobKeeper. There's specific rules for service entities. None of that's changed. Not-for-profits, the same rules apply. You're 15%, and you can include government grants if you have already, or you can choose to include them. If you haven't included them, don't include them, but you also have donations. So not-for-profits are a little bit different, but you should be aware of those rules. And if you're not, happy to have a chat. The enrolment process, timing and arrears, as I mentioned. Tax treatment for JobKeeper payments is accessible. You don't include it in your calculation for turnover, but you do include it as accessible. We talked about the basic test. I probably don't need to go this in great detail, but remember looking at your BAS, it's the actual GST turnover for the quarter, October, November, December, that you're looking at and comparing against the quarter of last year. Again, if you don't meet the basic test, you can go to the alternative test. The two sort of popular ones are substantial increase in turnover or regular turnover. Go to the next one. We've done a few tests. I think it's the one after this, actually. So we've done a few tests on those two tests, which is there's been, a substantial increase in turnover because it's a new business that started maybe 2 years ago and it's been increasing. Business restructures, maybe you commenced earlier. So there's reasons for having this. If you go to the slide before this one, Nicola, if you don't mind. Okay, what is your GST turnover? What is the amount? What do you include? So it's basically what you charge GST from. If you were on an accruals basis, you include that. So look at your business activity statement, and it's probably fairly clear from that. Sometimes there's a question as to you receive a grant. You may have included the grant in your BAS, but should it have been there in the first place? But I really see that more with not-for-profits than anything else, because if for-profits receive a government grant, usually they're GST inclusive and they would be in your BAS. Next slides, and the one after that. So just in summary, that is the last JobKeeper. There won't be any more. There's no whispers or murmurs that there'll be any more JobKeeper. Then you'll have to stand on your own 2 feet. And it has been a great help to many businesses and continues to be a great help, especially in the hospitality and entertainment area. As you can sort of probably see from the environment, people are relaxing a little bit. Vaccinations are coming out. I mean, not that anyone's got an injection yet, personally in Australia, that is. But, businesses will still be struggling. And so January, February, March will be the testing time at the end of that JobKeeper. Although it's only, 1,000 or 2,000 a month per employee, it does actually, I've seen a few balance sheets where it does boost the income, or comparable to last year in some cases, and mainly maybe for not-for-profits more so. JobKeeper version 1, it's actually version 2 now, but to December has decreased, so we know that the amount, we've got that there. Business participation entitlement, this is for more business owners. That is still available if you were receiving it previously. Next slide, please. So JobMaker, I did a presentation with JobMaker a couple of months ago, maybe a month ago. One thing to note about this, it is a bit fiddly and there is a lot to sort of take into account. And one question that's been raised is, how do I know that this employee would even meet this criteria? So one of the criteria is that the person has to be of a certain age. and also would have had to be on JobSeeker or a youth allowance or parenting support payment. Now, how in the hell, when you interview someone, do you know this? Because, you know, discrimination, hello. Well, one way to do that is that if you like the person, you know, they fill the role, you don't know, you may know their age because you may get a date of birth, but you don't know the rest. Well, when you send them the employment form, you know, agreement, you could send them the JobMaker nomination, employee nomination form. The nomination form is a form they would be making a declaration as to their age, if they've been on JobKeeper, sorry, not JobKeeper, JobSeeker and youth allowance. Now, just on that point, if your organisation is on JobKeeper currently, you can't get JobMaker. So clarify that again. If you're currently on JobKeeper, you can't get JobMaker. So if at the end of September you're on JobKeeper, you're welcome to get JobMaker if you meet the criteria. If you're on JobKeeper up to the end of December, you can't get JobKeeper in that quarter, that first quarter, which is October, November, December. But certainly when you're off JobKeeper, you can come on to JobMaker. And what I'm saying is it'll make more sense at the end of this conversation if you don't really know anything about it, why I say send the nomination form out to employees, because then you can have a look at the end of a quarter and say, okay, has there been a change in my payroll? Has there been an increase in headcount? And if you say yes to that, you can look at your nomination forms and say, well, how many of these will I get a credit for? So I'll go through that in a bit more detail now. So this begins from the 7th of October, and it's looking at new jobs created from the 7th of October till the 6th of October 2021. So at any point, any job created in that period, you get 12 months a payment. So what is the payment? So 12 months from the date the new position was created. So if someone comes in on the 5th of October, you met all the criteria, and we'll go through that. The 5th of October, they'll get it for 12 months. Who gets it? The employer gets it. What do you get? Eligible employers are entitled to either $100 or $200 a week for each additional eligible employee hired. Not every employee hired, and you've got to meet the criteria to get that. So what happens is you form a bit of a baseline, and I've got an example at the end, baseline at the end of September, and you look at your headcount. What's headcount? Headcount is full-time, part-time, casual employees at the end of September. And then underneath that, you do another little line and you say, okay, what is my payroll? So for September, so July, August, September, you look at what was your payroll, including super that you paid. So keep those numbers in mind. And then what you do is you assess at the end of each quarter. So this, instead of like a JobKeeper, it's assessed monthly. This is a job quarterly. So when do you get the money? You get it in a month in arrears. So if you're looking at September, you've met the criteria, you got October, November, December, you assess in January. You think, oh, I've got this. You apply sort of around that, somewhere around that time, probably at the beginning of February, and you get your money in February. Okay, so it's a month sort of in arrears from the 3 months. It's complicated, isn't it? But I've got a little timeline. So who's eligible? So eligible employee must have been on JobSeeker, a youth allowance or parenting payment for at least one of the previous 3 months at the time of hiring to be claimed quarterly in arrears. By the employer from 1 February, because 1 February is about the assessment time for that quarter. Commencement period is for that year, as mentioned. Eligible ages, so you've got 16 to 29 years old, it's 200 per week, and 30 to 35, it's 100. I think there's a bit of discrimination on age there. But they want to get the young people in jobs. That's the purpose. Work for at least 20 hours on average per week, and applies to part-time, full-time, casual employees, as long as you work 20 hours. So additional criteria, which I think I mentioned from the 7th of October, is the increase in headcount, so by the end of the quarter, and the increase in the payroll. And you compare the payroll July, August, September to October, November, December. So you're comparing to see if there's been an increase in both of those two, headcount and payroll. Next one. Who's going to be an eligible employer, you need to have an ABN. You need to be up to date with your tax lodgements. You need to be registered for PAYG withholding. So if you don't have any employees, forget it. You need to be reporting on single touch payroll. Most of you are, if you've been on JobKeeper or considered it. You meet the additional criteria, which was the baseline I was talking about before. You're claiming in respect to eligible employees. So eligible employees is the age that I mentioned, and they would have been on some sort of allowance, JobSeeker or so on. And you need to keep adequate records of what you pay them, but that's your payroll does all that. Excludes government departments, so if you're a government agency, and excludes entities on JobKeeper, as I mentioned. And there's a rule for newly established businesses if you established your business, say, after 30th of September, but I'm not going to go through that. Next, please. So action to take. I think check if you're an eligible employer first. That means you're not on JobKeeper. Track how many employees, full-time, part-time, you have at 30th of September. Track new employees, their ages. How do you do that? Send the JobMaker employee nomination form, which is available on the website, and we can send you the link after this webinar. Don't need to register every time you hire a person. Remember, it's done at the end of the quarter. Registrations are open, but again, you probably wouldn't need to do anything until you're assessing at the end of the quarter. So we're on the, 15th of December. It's all nicely comes over Christmas. If you're a December year end, that's okay because you're probably in the office. The first week back in January, most people probably take a couple of weeks off. You've got 3 months to submit the claim. So, even if you're on holidays, you can do it to be beginning of February. First reporting period, so the 7th of October to the 6th of January, that's the dates they're looking at. Submit your claim by 1 February and get your money in February for that quarter. You're paid 3 months in arrears, paid to the employer. So what will happen is that if you are eligible, you get that 200 per employee or 100 per employee every week after that for a year. So it'll just tick along, a bit like when you got the JobKeeper. So you get $100 for any new employee for a 12-month period each quarter in arrears aged between 30 and 35, and receive $200 per week for new employees for 12 months each quarter aged 16 to 29. It makes you think that maybe this is a little bit more aimed at certain industries, hospitality, or where you're hiring a lot of people all the time. And as I say, time of employment, fill out their nomination forms. That's how you're going to assess whether the age, because they have to tick the boxes, and then also you're going to assess if they've been on JobSeeker or youth allowance or something along those lines, because it'd be hard otherwise to ask the people that question all the time. They'll think you're discriminating. Next slide, please. So this is just an example of what you could put together as a bit of a baseline. I had 2 employees and that's my payroll, and then at the end of that quarter I had an relevant period. I don't know, I think that was supposed to be 6th of January, but it says 6th of June. So we'll fix that slide up before we send it. So payroll for October to December, and you compare it to October, 7th of October to the 6th of January, just to, keep that in mind. And you can see there's been an increase. So then you look at who is your new staff, and then you say, okay, yes, they meet the criteria, and you make the application through the portal, like we've been doing. There'll be a possibility, or through the tax agent as well. You can see there's quite a bit of criteria to meet on this JobMaker. I think it's going to be really useful for some industries, but for some it's going to be painful. And just probably get your comments on that. Is there I think that was the end of the slides. So questions.
So far we just have one question, Mariana, which is, when is the due date to reassess the eligibility for January to March JobKeeper allowance?
Yeah, so usually it's going to be in, so you're assessing October, November, December, and you're assessing it in January. So usually you're going to be doing it at that time. Now, you've got to remember that you probably have until the end of January, because you're not going to get your first payment for January to March until early February. So it works the same way as before. So if you just, I'll go back a step. So if you're on JobKeeper now, your last payment for December, you'll make, you put in all your numbers, as in what did you earn for December and what you project for January in early January, and you'll get that payment around the 14th, before the 14th. As soon as you put that in, you usually get your payment. For the new JobKeeper from January to March, you'll be assessing October to December, and you'll be putting your application in probably early. You can do it any time if you've got it, but that you meet the criteria, but you're really putting in for the period of January. So you would have had to pay them. So you had to, comply with the wage, and then you effectively, so there's one thing to reassess, and then there's another thing to sort of put in the reporting, which you're doing currently. And that reporting will be done the first week of February, so at the end of the month. And you will get your money in early February. So I'd say you'd have to the end of the month to do that assessment. Okay. Hope that makes sense.
Yeah. So next question. If we're on JobKeeper up until the end of December 2020, but not eligible from January 2021, could we claim JobMaker in January 2021 for the new head count from January 2021 to October 2021?
Yes, you can. So once you're off JobKeeper, you can assess yourself for JobMaker, but your period would start after JobKeeper has ended. So yes, that's correct. So it'll be that 6th of January period onwards.
Okay. And next question, a staff member on JobKeeper leaves, then comes back in 1 month. Does he qualify for JobKeeper?
Interesting. That's an interesting one. Greg, had to be you. Where'd he go? Did he cease? I wonder. So if he ceased employment, it's an interesting question. Maybe that's something we'd have to ask the ATO, because the reality is he ceased employment. So on the STP, we would have put ceased employment. And then what? You're going to re-employ them again? So they're outside of the time period to re-employ them? Because I know that they were employed before 1 July, but they sort of left. And I assume they've resigned. It's not like they were on some sort of sabbatical or something. So I think it makes it complicated if they've resigned. And Greg, if you want me to ask the ATO, let me know.
Oh, Greg has responded.
Oh, yeah.
Did you read that?
Oh, they went elsewhere and didn't like it, and we took them back. I think that's hard luck, actually. I think they should have thought that through before. I think it'll be difficult to be on JobKeeper for that re-employment period. But happy to check for you, Greg.
That seems to be all the questions we have at this stage, Mariana.
Thank you.
Any more come through?
Look, I hope that's been useful. I mean, obviously you can all read, and obviously I had a read of it, and it does make it a lot easier if somebody's going through and just pointing some things out. It doesn't mean there's not a lot of work in really applying for the manufacturing grant. I think there's a bit of work involved there. It will keep you busy up to the 21st of January. If you haven't already thought through the project, if you've already got a project that you're going to start, or maybe you want to claim a portion of that project and you've got all that documentation, then potentially, yes, you can apply. But just remember that you won't get back anything you spent. It'll only be once it's approved. And then the question will be, what expenditure will they allow, give you back? What expenses? And if I don't speak to any of you before Christmas, I want to just wish you a Merry Christmas, safe and enjoyable holiday. It's been a fantastic year. Some could say it's been awful. Some would say it's been great. I'm neutral. I'll be Switzerland on this one. But come back fresh and ready to take on 2021. And I think we've got a little survey here. It's more just, would you like someone from HLB to contact you regarding any of these specific grants. Again, it's just a chat. There's no obligation. It's just making sure you're aware that they're out there. There's probably a lot more grants, but these are the bigger ones that are showing. Obviously, I haven't covered off on the R&D Tax Incentive. I've probably done that to death many times, but that is still available as well.